What's good, YouTube? It's your boy Doyle back with another video, man. Today's video, I'm gonna be breaking down my step-by-step process on determining the direction for the day and really just choosing like my overall bias for the day. Now, top-down analysis is not overcomplicated. I'm not gonna be using fancy terms. I mainly use supply and demand and breakouts, but I keep it super simple. Market structure is key. And let's just not overcomplicate this, okay? So again, top-down analysis is very simple. You're looking for a higher time frame confluence to go in on the lower time frame to go in that same direction. So it's really just 4 steps. I want to break that down in this video. If you're brand new to trading, I've been trading for 7 years. I went full-time in 2021, and I'm still full-time right now. So you definitely want to take some notes. If you already experienced, then I'll just see you on the next video. But this is really just for educational content. Like, I'm trying to help somebody out. So please take some notes. Now, first step. The first step is price need to be above the 13 EMA on the daily chart. Now, I use moving averages in my trading. Okay, I've been using these same moving averages since I was trading Fibonacci. For my older videos, for my people that's been watching for a while, I used to trade fibs. And I've been using these same moving averages even back then. So this is not nothing new. This is just like an updated approach going into 2026. So step 1, price needs to be above the 13 EMA on a daily chart. Step 2, the 4-hour needs to create some type of demand zone that have a break of structure. So let's go to the 4-hour. If we go to the 4-hour, we can see that there is a 4-hour demand that also have a break of structure that broke above this swing. If you don't understand what break of structure is, you need to go to the basics of higher highs, lower lows. This is just simple basic market structure 101. When they break a new high, they like to pull back, and sometimes they like to pull back to demand zones or even take out liquidity but continue up. So once I see that they make a new high and they created a gap in front of that 4-hour demand zone, I would draw a zone around this bearish candle right there. Now, when it gets back to the zone, this is where we're looking for buying opportunities on the 5-minute chart once they start taking off from that area, okay? So first step, 13, you need to be above the 13 EMA on the daily. Second step, there need to be a 4-hour demand zone. And the third step is that we're looking for the 5-minute chart to create another demand setup. But we will want to see it have a break of structure, or there's no gaps in this swing, and then whatever else they tap within that area, we'll try to take that, if that makes sense. I will break this down a little bit more in case you're kind of confused on what I mean by there's no more gaps in this area, because once they fill in the gap throughout this whole area, they're going to be ready to go back up. Okay, so let's go ahead and go to the 1-hour. Okay, now the 1-hour, it's not really a lot of information. Okay, this is a 4-hour zone. You can't really do too much with the 1-hour. Let's go to the entry time frame, which is the 5-minute. Now, what am I looking for in the 5-minute after they tap this 4-hour demand zone? I'm looking for buying pressure coming in immediately after they tap the zone. So what you want to look for after they tap your higher time frame zone is a 5-minute demand setup, okay? Breaks of structure going the other way, or you could be looking for somewhat of a liquidity grab, okay, in this area as well. There's a lot of different variations, because when it comes to higher time frame zones, it's not gonna always be picture perfect. They tap the zone and then they just start breaking up. It's not gonna be perfect like that, but the main thing that you want to focus on is where is the break of structure, or other traders call it a change of character. You just want to see somewhat of a break of structure. Now, me personally, how I would approach this day if it tapped the 4-hour demand zone is I would put a 5-minute demand zone right here. Now, when you're drawing out your supply and demand zone, you want to focus on the swing that taps the zone, which is this area. Now, when they came back to this 5-minute demand zone, they filled in the gap for this whole entire swing. So now they're ready to go. Okay, just like I said before, if they fill in the whole gap in that entire swing, then there is no gaps to fill. They're probably ready to go. Now, if this was just too risky of a trade, because this will be my entry right here. Once they tap the zone, give the break of the candle, this will be my entry right here. Now, say if you just don't like this setup, okay, you will wait for them to break structure. Okay, so once they break structure, breaking this swing, they form another demand zone. Okay, you can get in aggressive right here. You can pull out a fib if you want to. Like, you know, it's a lot of ways to, you know, get into this trade, but I'm looking for higher time frame zones to get some sort of a directional bias on my lower time frame. Okay, now this is very, very simple, but I have another example that I want to talk about because it's going to be some days where the price action on the 5 minutes is not going to look as beautiful as this. Okay. All right. So the second example is going to be for a sell opportunity. So it's essentially the same thing. We're just doing everything the opposite way. So step one, price need to be trading underneath the 13 EMA on the daily chart. Okay. So instead of looking for buys where we was looking at the daily chart above the 13 EMA, for sales, we're looking for price to be underneath the 13 EMA on the daily. The second step is we're looking for a 4-hour supply that have a breaker structure. Okay, so let's go to the 4-hour. And we can see that we have a 4-hour supply right here. And we're also, let me stretch these candles because we want to make sure that we are accurately drawing up our zones. So it looks like we have 2 4-hour supply zones. Yeah, they're not perfectly. There's a small gap in between that candle right there. Very, very small, but it's there. It's in between these 2 boxes right there. That's where the gap. So this right here, because you have to zoom in on these candles, we have 2 4-hour supply zones. We don't know which one is going to hold. We just have to prepare for it. Okay, so let's fast forward. Okay, now we're looking for the 1 hour to either scale down this 4-hour zone on the 1 hour, or we're going to have to wait until we see a change of character or a break of structure going to the downside on our entry time frame. Okay, so let's go to the 1 hour. Okay, and the 1 hour, yes, you can scale down this zone on the 1 hour, so that's even great. That's even more confluence. Okay, so this one, unlike that first example, this one actually can get scaled down on the 1 hour. So that's great. Now we're going to go to our entry time frame to wait for us to see some sort of supply zone being created, EMAs to cross downwards on our entry time frame. So let's go to the 5 minute. And what are we looking for on the 5 minute? We're looking for structure to slow down at our 4-hour supply zone and start doing this. That's what we're looking for on our entry time frame. Now, if we look at this example, this is a 4-hour supply zone. The horizontal line is from the 1 hour, and we can see that we have a breaker structure right there. We have another breaker structure right here, and we have these little minor breaker structures right here. But these 2 are important because, again, we're coming from an uptrend on our entry time frame, but then we start getting 2 breaks of structure going to the downside. And what do they do after they break structure on this first swing and the second swing? They create another supply zone right here. Okay, now confirmation to go in for a sell is the 13 EMA and the 50 SMA crossing. That is extra confluence to go for a sell. Your entry will be right here for a sell. Stop loss will be right there. And you can go for a 1 to 2 or a 1 to 3, or you can just go for a 1 to 1, really up to you. But this is something that I'm looking for as far as a directional bias on my entry time frame. So again, we came from the 4-hour supply. Okay, the daily is underneath the 13 EMA. The 1 hour was able to scale down from that 4-hour, and then we go to our entry time frame, which is the 5 minute, and we're looking for breaks of structure. We're looking for EMAs to cross. Okay, that cross is very important because it's showing you that sellers are starting to step in and be in control of this market. So just like the buys, we saw the 13 and the 50 cross upwards, and then it created a demand, and it's going to do the exact same thing for sales. So hopefully this has helped you, so you can understand like directional bias on the lower time frame versus the higher time frame. Market structure is key. If you don't understand market structure, if you don't understand higher highs and higher lows, then you're going to be confused on the direction. I use moving averages as a guide, but market structure is always going to be over these indicators. So hopefully this helped you. If you're brand new, definitely add this to your arsenal that you're already using. You could, like, this is like information that you can use with extra strategy. So you could add to, you know, this little model that we're looking for. So let's break down this again one more time before we end this video. Step one, we're looking for price to be above the 13 MA on the daily for buys, or for sales, we're looking for price to be underneath the 13 MA on the daily. Okay, we're looking for the 4 hour to have a higher time frame supply and demand zone. On the 4 hour, we do want it to be scaled down on the 1 hour, but if it doesn't, that's fine too. And on a 5 minute, we're looking for a breaker structure going in the same direction as that 4 hour supply zone or 4 hour demand zone. Okay, and we're looking for the 5 minute to also create the same type of setup going in the same direction as the 4 hour. Okay, hopefully that doesn't confuse you. Please rewatch this video if you are confused on, like, okay, what do you mean by this? And yeah, give me a like if you want me to do more videos like this so people can understand that supply and demand, it's a lot of layers to it. It's not just, you know, break a structure, come back to the zone. We're looking for multiple things to get the odds in our favor of winning these trades. So that's all I got. Peace and love. I'm out.